Our mission, as always, is to take that stack of sources you give us, cut through all the noise, and really give you the clarity you need to understand what's driving the biggest moves in the market. And today, wow, we are looking at a massive single-day jump, an 8% green explosion that hit trading desks right after the Christmas break. We're talking about ZETA Global Holdings Corp, ticker ZETA. It just launched on December 26, 2025. I mean, an 8.32% rally to close the session at $20.70. For a stock that's been going sideways for weeks, this is, well, it's more than just a headline. The analysis report we're digging into treats this as a huge market signal.
That's absolutely right. When a stock adds over $1.50 in a single session, especially coming out of a flat period like that, the market is signaling some serious conviction. So our deep dive today is all about moving past that headline, the 8% green day, and figuring out the specific catalysts, the acquisitions, the projections, the strategy. What is actually fueling this? The report puts it really well. It says the market sees ZETA as a top pick for 2026.
Okay, let's unpack this. We have to start with the chart, with the technicals. The report calls this a, quote, technically perfect breakout.
It was textbook. I mean, if you look at the intraday action described in the analysis, ZETA opened pretty flat, right around $19.
Yeah, just over 19.
But from that point on, it was just relentless buying pressure, a one-way trip higher all day long, and it closed almost exactly at the high of the day, $20.71.
And that strong close is important, right?
Oh, it's huge. It suggests nobody wanted to sell into the bell. The institutional demand was just absorbing everything.
And the critical number here, the psychological landmark, has to be that $20 price point. That wasn't just some random number, was it?
Not at all. For weeks, $20 acted as this massive psychological resistance. In trading, these big round numbers, 10, 20, 50, they're emotional barriers, places where sellers are parked.
The ceiling.
Exactly. The ceiling, the stock just could not break through. So when it smashed through 20 so decisively, it just unleashed a wave of confidence.
So, okay, we've broken the ceiling. What's the immediate technical implication of closing above $20 like that?
Well, the script flips completely. Now, $20 is expected to become the new support floor. So analysts will be watching any retest of that level very closely. If it pulls back a bit and $20 holds firm, that validates the entire breakout.
It proves it wasn't just a fluke.
Exactly. It proves that the big money accepts this new price, that it's the new baseline.
And speaking of big money, the volume was a big part of this story. The analysis report specifically mentions big institutions are loading the boat.
Yeah, and the volume is the confirmation. Think of it this way. Retail traders can cause a quick spike, sure, but sustained, heavy volume like that all day long, that tells you that large institutional capital, the quote-unquote smart money, is moving in.
So they're not just buying a little, they're accumulating a major position.
They're loading the boat because they see this breakout as totally legitimate, and they have strong expectations based on the fundamentals. The volume validates the price.
Which is the perfect transition. The chart tells us how it moved. Now we need to know why. And here's where it gets really interesting. The report calls this an 8% jump, but also a delayed reaction. Yeah. What were they finally reacting to?
The market was slow on this one. The real driver was the raised financial guidance that ZETA actually put out back in November. Wall Street kind of shrugged at first, but this breakout suggests they're finally waking up to the full picture, especially what it means for 2026.
And the cornerstone of that guidance is the Marigold acquisition. This isn't just organic growth we're talking about.
Oh, not at all. That's the engine. The report is very clear. This is not fluff. They've completed the acquisition of Marigold's enterprise business unit. And for a marketing tech company, that means you're integrating significant high-value customer relationships and, very stable revenue streams.
So that's what's modeled to have such a big impact on the 2026 outlook.
It provides certainty and it provides scale.
Let me play devil's advocate for a second. The market had this information for weeks. Is it possible they were hesitant because, well, integrating a huge business like Marigold is really, really hard?
That hesitation is exactly why it was a delayed reaction. Integration risk is always a real concern, but that 8% jump, that tells you institutional investors are now very confident that the integration is on track and that the financial impact is, imminent.
Okay, let's nail down that financial impact because the revenue projections are huge.
The numbers are really compelling. For this year, 2025, revenue was raised to about $1.29 billion, but the number that's really fueling this rush is for 2026. Revenue is projected to jump sharply to $1.73 billion.
Wow.
That leap adding almost $500 million in revenue year over year, mostly from Marigold. That's why institutions are scrambling to get in before year end.
And the analysis points out this isn't just growth for growth's sake. They highlight the guarantee narrative growth at a reasonable price. For our listeners, can you just quickly break down what guarantee means and why it's so attractive right now?
Sure. GARP, or growth at a reasonable price, is basically a shift away from that growth at any cost idea that we saw a few years ago. Investors want strong revenue growth, yes, but they also want to see fiscal discipline. They want a clear path to actual profit.
And ZETA has that.
The report stresses that ZETA is getting very close to GAAP profitability, and at the same time, it's, and I'm quoting here, printing free cash flow.
Okay, let's define those two things because they're important. GAAP profitability versus free cash flow.
Right. So GAAP profitability means that according to the strictest accounting rules, your revenue is starting to beat your expenses. It's the sign of a mature business. And printing free cash flow means that after you pay for all your operations and investments, you still have a ton of cash left over.
So it's real cash, not just numbers on a spreadsheet.
Exactly. It proves the business model is sustainable. That cash can be used to reinvest, pay down debt, or make more acquisitions. That combination, aggressive growth and real financial health, is like a magnet for big institutional money.
So we have the driver. Marigold, huge 2026 guidance and improving profitability. Let's look forward now. Numbers are great, but you need a competitive edge. How is ZETA protected? This brings us to the AI story.
This is their moat, their strategic advantage. The core of it is ZETA's proprietary AI platform, which is called Athena. The source material uses a great metaphor. As AI marketing spending explodes in 2026, ZETA isn't the gold miner, they're the shovel seller for that gold rush.
I love that. So they aren't betting on one specific campaign. They're providing the essential tools that everyone else needs to even play the game. But what does Athena actually do?
So Athena is built to process just massive amounts of consumer data, we're talking billions of signals, to automate and optimize marketing campaigns for big companies. And the Marigold acquisition didn't just add revenue, it added a huge new pool of customers and all of their data.
So the acquisition feeds the AI.
Precisely. Athena gets smarter and more effective with all that new data, creating personalized campaigns that are really hard for competitors to match. The platform gets stickier, it gets harder for clients to leave because the performance just keeps getting better.
Okay, so that makes the $1.73 billion projection feel much more concrete. It's not just a guess, it's a system. New clients from Marigold are served by a proprietary AI that gets better with every new client.
Exactly. That synthesis is why the report has such strong belief in 2026 being the year of ZETA. They're selling a solution to a complex problem, and that drives really reliable revenue. The strategic advantage of Athena is what justifies those aggressive growth targets.
So with the technical ceiling broken, the fundamental fuel in the tank, and the strategic moat defined, we have to look at market consensus, the social proof. What are analysts saying about this $20 price?
The consensus is incredibly strong. It really reinforces everything we've talked about with the institutional buying. The overall analyst rating in the report is a strong buy. It's not a mixed bag. The experts are pretty much aligned here.
And what are the actual price targets? Because it gives us the real risk-to-reward picture.
The targets really show you the potential upside. The report states that the average consensus price target is right around $30. So from a 2070 close, you're looking at nearly 50% upside just to hit the average.
50% upside just to hit the average. That's a huge vote of confidence. But the report also has a much more aggressive target, the bull case. What's behind that $44 number?
The bull case at $44, yeah, that's over 100% upside. Analysts who get to that level are modeling in, best case scenarios, a faster integration of Marigold, higher margins, a quick rollout of new features for Athena, and basically ZETA just taking a huge chunk of market share in 2026. If that year of ZETA story plays out perfectly, then yeah, the stock is clearly undervalued at $20.
And for institutional investors, that risk-to-reward ratio is everything.
At $20.70, with $20 now acting as a solid floor, the downside risk seems pretty limited compared to that 50 to 100% upside potential. The report sums it up perfectly. It calls the ratio absolutely golden, and that justifies the intense buying we saw.
Lastly, for anyone tracking this tactically, the report lays out some technical targets. Where are traders looking next?
For short-term traders, the roadmap is clear. The first big hurdle is $23. That was a previous area of heavy selling. If it breaks that, the next objective is $26.60, which is the 52-week high.
And if it clears both of those?
If ZETA breaks both of those convincingly, then the path is pretty clear toward that long-term analyst target of $30 and beyond.
This has been an incredibly clear breakdown of a very explosive move. We've got the technical breakout over 20, the fundamental firepower from Marigold underpinning that massive $1.73 billion guidance for 2026, and the strategic moat from the Athena AI platform. It all connects.
It really does. It's a cohesive narrative, which is what institutional investors love to see. The game plan in the report sums it up. For swing traders, it's simple. Does that new $20 support level hold? For long-term investors, though, the focus is entirely on the 2026 growth story and execution.
We've identified the technical signal and the powerful fundamental conviction behind it.
And this raises an important question for you, the learner, to think about. Given the heavy institutional loading suggested by that huge volume on breakout day, and the fact that institutions tend to move much faster than retail, how quickly might the market try to close that gap between today's 2070 price and that $30 average analyst target? Institutional conviction often leads to very rapid repricing, and that velocity is definitely something worth monitoring